Hello, everyone, and welcome back to our resilience series for regulated firms. My name is Ian Duffy, and I'm a partner in the Technology and Innovation Group at Arthur Cox. And in today's video, we'll talk about how third-party service providers in your supply chain can potentially have a significant impact on the resilience profile of regulated firms. And as part of this, we'll look to talk about how you can identify, manage, and mitigate some of that resilience risk in a way that aligns with regulatory expectations and that's consistent with good industry practice. And I'm delighted to be joined by my colleague, Denise Murray, who is our Head of Financial Services Compliance and Regulatory Relations, to discuss this topic and to share some insights with all of you today. So, welcome, Denise, and thank you very much for joining me. Denise, I might start off with a reasonably broad question, and perhaps you can give us a sense of why it is that third party service providers can potentially have quite a significant impact on regulated firms' resilience profile.
We might need to take a step back in before we crack that question directly. The financial services industry is really a highly globalized, interconnected ecosystem. And it's an ecosystem in which outsourcing is already highly embedded. But that brings a vulnerability, the vulnerability that a disruption can have an impact that can very quickly ripple across borders, across providers, and across markets. That level of outsourcing that we see is evident in firms that continue to provide certain services internally within their own operations, but also rely on third-party providers or group entities to support the delivery of their regulated services on an ongoing basis. I guess more broadly in the financial services sector, we're familiar with supervision in the context of outsourcing and third-party relations because we see regulators engaged at the point of authorization and on an ongoing basis for supervisory purposes to understand how services are delivered and particularly how outsourced services are delivered. And in recent times, we've seen a really increased focus on resilience and outsourcing as part of the regulatory footprint. And because of those kind of more recent changes, we've become more familiar with concepts like critical and important. And I'm sure many people listening today will have been involved in some of those criticality assessments under outsourcing or DORA or resilience requirements most recently. So maybe back to your question, how can that third party vendor have an impact on your resilience? And it's really straightforward. Whether it's a critical or non-critical service, if your vendor can't supply that service, and if that service impacts on your delivery, then your resilience is compromised. And understanding that is really what's core to resilient organizations and arrangements. And it's not only the kind of long-standing outsourcing arrangements that need to be considered, it's much more broad. And it's important that when you're looking at those relationships and the vendors that you're engaging with, that you consider things like the chain outsourcing and maybe any lack of visibility that you might have through the chain. So we're very comfortable with third parties, but what about the fourth, the fifth, the sixth party that's involved in delivering the service for you? What happens if something goes wrong there? And very often through that kind of chain of sub outsourcing, you may not even be aware of that provider until it's too late.
Yeah.
I think it's important also to consider things like the potential for reputational damage and negative associations, though notwithstanding the fact that you may have done all that you can in the context of your oversight of your outsourcing arrangement. Nevertheless, if there's a disruption and there's an outage of service or there's an impact on your operations, you can erode the trust and confidence of your clients, and that can happen quite quickly and have quite long lasting effects. And we've seen that and discussed that in our other video series. And I think moreover, I think particularly in the context of resilience and developments over the last number of years, we're becoming more conscious of concentration risk and what that might mean for our financial services providers. So we know that there's a number of industries that are quite concentrated, particularly around technology and cloud services. It's not practical for firms to have multiple providers offering those services to their operations. But it is important that we think about what happens if there is a significant operational issue with a provider that is in a concentrated area. How do you mitigate for that? And how do you prepare for those kind of impacts as they may arise? And they're really important considerations when you're considering the risk assessment phase of the work that we all have to undertake when we're thinking about a third party relationship. And really, I think this goes to the importance of that risk
Yeah,
assessment,
for sure.
and the due diligence at the
Yeah,
outset, that a regulated firm is looking to complete, but also that there's kind of an enduring and an effective due diligence on an ongoing basis.
yeah.
Because realistically, what is benefit to firms is if we have a no surprise basis in terms of our outsourcing arrangements.
Yeah, I think that's absolutely right, Denise. And I think, even before you start focusing in on the specific service provider from a diligence perspective, it's important to take the steps to understand the nature of the services that you're looking to procure and how that interacts with your operations more generally. And I think when you're talking about the nature of the services that you're looking to procure, a key factor, a key consideration there is, well, is the service that you're looking to procure a critical or important service? And that will be an important factor when it comes to trying to think about what are your regulatory obligations that will be applicable to those services. So, will things like DORA be relevant? Will things like the CBI operational resilience guidance be relevant? Will potentially the CBI outsourcing guidance be relevant? And once we understand that, we have a good baseline then to figure out, well, what are the sort of rules and requirements we need to think about here from a resilience perspective and more broadly when we're procuring these type of services. And from there, once you've done that, you can start to turn your attention a bit more towards the service provider itself and start to think about how you go about diligencing them to get the assurances you need that they can deliver those services in a way that's operationally efficient and appropriate, and that's also resilient and secure as well. And when you think about the specifics of the nature of that diligence you're trying to conduct, a lot of it really is just trying to get the assurance around their track record, around their ability to deliver the services. So, does the provider have the expertise, the experience, the resources to deliver those services? Also, as I touched on already, you'll want to ensure that they can give you assurances in relation to their ability to deliver them in a way that's operationally resilient and that's secure. And in that regard, you might want to look for confirmation, for example, that the provider is certified to ISO 27001 or perhaps other NIST standards. And to the extent that you can get any assurances around, their track record of minimizing operational disruption for their clients and their ability to effectively respond to that as well, that will be helpful too. And once you've conducted all of that diligence, you've got comfortable with the supplier, you also need to make sure you're comfortable with their service delivery model and you understand how that's going to be deployed and how that interacts with other functions that you'll continue to provide in-house yourself and with other services that you receive from other providers as well, so that you can start to map how those services will work. And for example, you can figure out some of the interdependencies between those services and functions you retain in-house or services you receive from other providers. And of course, all of that stuff that I've just discussed there, Denise, ultimately has to be translated into a formalized regulatory and compliance framework. So could you give us a sense of some of the key aspects that we need to think about in this context?
Absolutely. And I think with that regulatory or kind of regulatory compliance lens, there's maybe three main considerations that are front of mind for me. So the first is the risk management framework. The second being your vendor's resilience and business recovery arrangements. And the third piece really being uh, the agreement, the underlying agreement that supports the outsourced activity. So if we take a look at the risk management framework, there's a couple of aspects there. The first is whether you as the regulated entity have developed the tools and the assessment capability to evaluate the third party in the context of the regulations that you've just
Yep.
described or the guidance that we know is there and the evolving best practices, but also that it relates and that assessment that it can relate to your business model. So it's relevant to you, not just to the
Yep.
regulations. And then when we turn to the vendor, your assessment process has to be able to consider the information that the vendor has provided in relation to their resourcing, their risk teams, for example, but also their risk methodologies and their monitoring and measurement criteria. Ideally, you want a vendor who has a similar risk outlook to the one that you have,
Hmm.
where you can kind of have trust and be confident that
Yep.
they'll make risk-based decisions and take actions that won't impact on how you deliver your service. That's the kind of the risk framework considerations. If we then look at the vendor's own resilience arrangements and frameworks, there's some important requirements in the context of the regulations themselves. But really what we want to make sure is that the vendor is undertaking its own resilience testing and exercises that it has had a recent business recovery and testing process in place, that it has documented procedures and processes to support that, or certainly want confirmation that those are in place. And then some practical things. So, is there a secondary site in the event that there's an issue with the primary site where services are delivered from? How is data maintained? Are there backups being taken? And again, is there a regular testing plan
Mhm.
for those fundamental, particularly data-driven services? And I think we also need to reflect on the central bank's regulatory expectation that for bigger and more substantive vendors, you should be engaged
Yeah.
in their disaster recovery plans. You should be a party to that, or be involved in that,
Yeah.
and that you certainly have the right to do so in the context of your agreement and where you deem it necessary, particularly for critical services and the delivery of those. And then, as I said, to that third point around the assessment process, um, there's a lot to be gained from the engagement that you have in the first instance with the vendor in negotiating the terms of the relationship that you're
Mhm.
going to have
Yeah.
for the ongoing provision of services. So whether there's opportunities to engage in the context of the reporting that you're going to receive, the key performance indicators, the notification process and
Yeah.
escalation processes, they're really good indicators, because you want that to support your own firm's responsibilities around RTO and RPO and
Mhm.
impact tolerance
Mhm.
objectives. And we know that for some of the more dominant service providers in some of those industries we mentioned already, it can be very difficult to get anything other than the templated
Mhm.
contracts and SLAs.
Yep.
And in that instance, really, it's got to be about the firm making a determination as to whether they're comfortable with the assurance that they're going to receive
Yep.
in relation to those standard agreements, or whether they need to look at alternative providers.
Yeah. No, no, absolutely, Denise. And I think that that last point feeds nicely into, something we've kind of skirted around a bit, but maybe haven't talked about as much thus far, is the contract, right? So
Yeah.
once you've actually done that piece around the type of diligence you need to carry out, you've put in place your oversight and monitoring framework, so you're comfortable that you have what you need there to effectively oversee the vendor. You still need to fundamentally ensure that you have a contract in place that gives you the assurances you need from a regulatory compliance perspective, and also, from an operational and commercial perspective too. And when it comes to, first steps in that regard, I think one of the really important things that needs to be done there is to actually classify these services. So what are they from a regulatory perspective? Are we talking about critical ICT services under DORA? Are we talking about non-critical ICT service providers or services under DORA? Um, perhaps we talking about critical outsourced services? Because I think fundamentally understanding that will help us figure out, well, what is it that we need to put in our contract for regulatory compliance? And of course, it's also possible that none of these are relevant, and the
Mhm.
classification is that none of the foregoing will apply. But fundamentally, figuring that out will give us our baseline in terms of what are the types of provisions we need to include here so we comply with relevant regulatory requirements in this space. And of course, as we've already touched on, there's then lots of operational and commercial aspects to the contract that will need to be addressed too. But once you have that contract in place, like you've touched on already, Denise, there is that ongoing monitoring and oversight piece. And that is really, really fundamental and important. And like you've touched on, having that sort of regular cadence of governance meetings and ensuring that you're getting the reporting and the information you need from your key service providers will be really important in terms of having visibility and that the services are being delivered as they should be, that they're stable, that there's no obvious operational issues. And ultimately, that feeds into you having assurance as to the resilience profile of the service providers that are important to your business as well. But look, we all know, even with the best and most robust contract in place, and with having a sort of thorough and effective oversight and monitoring regime that is applied in practice, things still go wrong, problems arise, there can be operational disruptions, and we need to be aware of that, and we need to be prepared for that as well, because there is an air of inevitability
Mhm.
to that. So I guess in that sort of scenario, when something bad does happen, there is a significant operational disruption. In the first instance, you'll want your third party service provider to tell you about it, right? And you'll want to make sure that they're providing you with the sort of assistance and information that you require and you'd reasonably respect. And ultimately, all of that should be baked into your contract. They should have that obligation to notify you and to assist you. But as you know well, Denise, it's not as simple as, you get your notification and that's it, and you get a bit of information and you're all done. There are other factors we need to think about when operational disruption does actually happen, both before and after the event. And maybe you could talk to us a bit about that.
Yeah, you're absolutely right, and communication is core and critical, but it doesn't end there. And I think it's reasonable to expect your third party vendor, your third party outsource provider, to have kind of medium and long term plans, and they may evolve as the crisis evolves, because often you kind of have to respond as the issue develops. But they should have those plans in place if possible, but very evolved as the issue continues on. Particularly if the resolution of the issue is going to take a little bit longer than expected, or indeed it's a more severe event that might require kind of some reformatting or reorganization of the way the services are being delivered. I think we'll all expect tactical workarounds when an issue arises, and communication around that kind of clearly important. And that's okay in the short term, but I think as we move on beyond the short term, um, tactical solutions won't work on a longer term basis. So I think the third parties then again need to demonstrate that they're assessing the situation to determine that the next best
Hmm.
thing to be
Yep.
done, or the next plan and the appropriate steps to be put in place. And that might mean even considering their own subcontracting. So if there's a fifth or a
Hmm.
sixth subcontractor, it may be important to exit some of those relationships and reestablish them. So again, ensuring that that's a consideration becomes really, really important in those scenarios. And then I think we really do need to think about the types of resilience events, and that we should be expecting our third parties to conduct those really detailed lessons learned exercises
Yep.
after there has been
Hmm.
an event.
Yep.
Often we get to the finish line and think it's done, but there's a huge amount to be gathered from those exercises post event, and ensuring then that appropriate steps are taken, maybe new KPIs are put in place or new controls are established. And again, that demonstrates the kind of ongoing due diligence and oversight process as well, that when an event has happened, your next due diligence will incorporate some consideration around
Yep.
that. And I think after all, we have to remember that this cycle of outsourcing is an ongoing and evolving process, because not only will the vendors change and issues arise, but also the entity outsourcing will
Hmm.
perhaps change during its lifetime. So it's important that at onboarding, but really particularly on an ongoing basis, that there's a real kind of considered view given
Yep.
to the relationship and the requirements of that relationship to ensure that it remains fit for purpose.
Yeah, yeah, absolutely, Lisa. And I think, look, when we talk about third-party service providers and resilience, I think it would be remiss of us not to talk about intragroup services agreements as well, because the central bank has been very clear that, that level of robust oversight and monitoring in relation to third-party service providers and third-party services agreements equally applies in the intragroup context as well. So the same high standards will apply. But nonetheless, there are additional considerations that are worth bearing in mind and taking into account when you're thinking about intragroup services agreements in a resilience context. So can you
Yeah.
perhaps speak to some of them, please?
Yeah, absolutely. I'm going to give you four kind of areas that I think of
Yep.
when I think about that kind of intergroup relationship. The first is around kind of local oversight and
Mhm.
ownership of an intergroup arrangement, which may sound odd because typically we think of our groups as being kind of one family. But in the regulations, I think we need to ensure that where there are established centres of excellence, and we see that particularly around HR,
Mhm.
finance, technology sometimes, those arrangements need to be treated in the same way. We know that from the regulations.
Yeah.
So at a fundamental level, there needs to be an agreement, there needs to be an SLA that needs to be documented,
Mhm.
and there needs to be reporting. So even though it's within group, there needs to be reporting
Yeah.
coming
Yeah.
across into to the local entity, and that there is some form of formal oversight discharge. So again, the ongoing due diligence is
Yep.
performed, and that there isn't a lesser standard to the point that you've just made for an intra-group arrangement. And again, we know the regulations are ever evolving.
Yep.
And there may be some forbearance coming in the context of what those intergroup
Mhm.
arrangements look like, or
Yep.
what the oversight of them looks like in particular, but we're not there yet.
Yep.
So we have to operate within the context of the regulations as they are today. Second area is around conflicts of interest. And we know within group structures that we have the kind of local chains of command, but we often have kind of matrix reporting as well for individuals. Our organizations are good at documenting where there could be potential for conflicts and looking to mitigate those. But I think it's important to give consideration to kind of under stressed circumstances,
Yeah.
how some of those arrangements may manifest themselves and whether a conflict could actually be heightened in the context of a resilience event where perhaps an individual may be torn in different directions in the context of that matrix reporting. So an area to kind of demonstrate our evolving thinking around our outsourcing arrangements. I think it goes without saying that autonomy is probably the third item that I'd raise because all regulators in each jurisdiction will want to see that their local entities can demonstrate their autonomy in the selection, the appointment, the review, and the oversight of vendors.
Mhm.
And in the decision making around that. So we can't ignore that step of
Yeah.
selection process, evaluation, and then appointment of a vendor. And then finally, I guess it's exit planning, which again can be quite tricky in the context of a group arrangement. But nevertheless, it's important that it is considered, it's documented, and that there is some meaningful evaluation of how or when there may be a decision taken to exit a group relationship. And often I think we need to think practically because sometimes it's the bigger arrangements that we think of first, but actually it might be smaller arrangements that you may have had with group and have moved since or moved from an external to a group. And that might give you just some useful areas to examine in terms of answering that particular question. And just a final point though, before leaving that I said 4, but I'm going to give 5.
Okay.
I think it's important that we talk about the principle of proportionality.
Yeah, for sure.
And that it really is not kind of a defense in the context of your third party arrangements, particularly when you're on an intergroup basis. So the proportionality of you within the local environment or within your group won't offset demonstrating that you've complied with the obligations more fulsomely.
Okay, that's great, Denise. Thank you very much. And thank you to all of our listeners online for listening in today. Separately, we've developed a resilience playbook that's available on our website that sets out some more information on some of the topics we've discussed today and provides some further practical insights and information in relation to resilience for regulated firms. So please do feel free to check that out on our website. And please also feel free to contact myself, Denise, or your usual Arthur Cox contact for more information on any of the topics we've discussed today. And thank you again for listening.